is up, everybody? Crypto Noah back with another yield farming passive income strategy video. In this video, I'm going to talk about all the things I think about when I go to set my ranges for my liquidity pool. All right. So before we dive in, I do have to say this video is not financial advice. This is my own perspective, my own research, and it should be treated as such. Do your own research always, but use this channel as a starting point always. So without further ado, let's jump straight into it. So we have to start with what the heck is yield farming anyway? If you're new to the channel, I talk about it a lot, but I'll explain it again briefly here. So yield farming is the act of loaning out your crypto to facilitate different things. There's four main ways to get a yield. The first way is to stake on that blockchain's validator network or node. So if you want to get a yield from the ETH 2.0 beacon chain, you can stake it on Rocket Pool or Lido and get like a 12, 13, 14% yield. The second way, is staking your funds on a borrowing and lending platform to facilitate borrowing and lending, such as Aave, such as Compound. You stake it on there as a supplier, and the platform will allow people to borrow your money, and they give you a piece of the yield passively. The third way is staking your funds on a platform to facilitate insurance premiums, such as Nexus Mutual. And the fourth way, the most profitable way, the way we talk about on this channel all the time, and the way we're going to be discussing in this video, is yield farming via providing liquidity on decentralized exchanges, such as Uniswap, such as Trader Joe, etc., etc. And essentially what you're doing is you're being a market maker. In TradFi, there are market makers for stocks, bonds, commodities. Every market has a market maker because they make the market, right? It's not the exchange that holds the Tesla inventory when you go and buy your Tesla stock on Fidelity or Robinhood. It's market makers like Credit Suisse, Deutsche Bank, Citadel that says, hey, here's 100 million in Tesla, here's 100 million in cash. Only use my liquidity when the price of Tesla is between X and Y. It's the same thing in crypto. You can take your ETH and your USDC, deposit it on Uniswap, and then let's move into concentrated liquidity. You can say, hey, only use my Ethereum and my USDC when the price of Ethereum is trading between $2,000 and $3,000, whatever range you specify. And that allows you to make passive income depending upon the volume and the TVL in that pool when anyone trades from ETH to USDC or from USDC back to ETH. And I've been saying for the past couple years that this is the best way to generate passive income in the history of the world, because market making was, before this, only exclusive to major financial banks and institutions. Now everyday people can do it, and those major banks and financial institutions aren't legally allowed to do market making activities in DeFi, so the astronomical yields are reserved for everyday people like you and I. So I have this channel, I make this content so that we can take advantage of this opportunity while it still exists in this capacity. This is definitely the golden age of yield farming. So now let's talk about how I go about setting my ranges when it comes to concentrated liquidity, now that we know what it is and now that we know what yield farming is. So the first thing I'm going to do is find a token that I'm bullish on, right? So let's say that that's ETH. And then I want to find what pair offers the most trading volume, like a higher, the highest volume to TVL ratio. Because if the volume is extremely high, but the TVL is like 30x the volume, you're not going to make that much money. And it's not bad, but you know, if I can find another one with the same amount of risk and I can make more money, I'm going to take that all day long, and you should too. Now you can also pair like a volatile asset with another volatile asset. So for example, instead of doing ETH USDC, you can do Bitcoin ETH. And usually, especially if you're pairing with a volatile asset, the best pair is going to be pairing it with ETH. And I don't mind that. I always say, and a super important thing is that you never want to provide liquidity for two assets that you don't mind holding on its own when it goes out of range, because you can experience impermanent loss. And if it's a shitcoin, it'll be permanent loss if it never goes back up. Let me give you an example. Let's say I'm providing liquidity in this range between these two boxes here, 3,055 and 3,976. The more price goes up, the more the smart contract is going to be selling my ETH for USDC, because you can think of yield farming as a limit order for the losing asset or the underperforming asset. And if it goes out of range to the downside, it's going to be accumulating more ETH for me. So if this is ETH balls coin and it's something I don't want, and it goes out of range, I don't want that, because then I'm going to be in all balls. Excuse my French. This is a real token, BALLZ. So now after I find an asset that I want to accumulate and I find a good pair, and I don't mind holding either of the assets if it goes out of range, let's talk about the next step. So now before I set the range, I want to come up with an idea in my mind as to where I think the market is going to go and set my range so that I can be within range, right? And the way I do that is using my technical analysis skills and my fundamental analysis skills. If you want to learn how to be a TA expert and how to analyze different projects like how I do on this channel and get access to our buy and sell calls, our yield farming course that teaches you how to print money in a risk adjusted way, just like I cover on these videos, click the link in the description, book a free strategy session. You'll talk to probably me or one of our team members. We'll see if it's a good fit for you. If it is, we're happy to work with you. If not, we're happy to point you in the right direction. Now, back to the video. Another thing I look at is, let's say I think price is going to be here, right? And this is my range. I also want to provide liquidity to a pair where I'm anticipating volume increasing. It's like selling shovels during a gold rush. And I made a video covering this entire concept. Definitely give that a watch if you haven't. But if you think volume's going to increase and people are going to buy it, and you can try to guess the price range where the most of the buying volume is going to happen, that is where you're granted the opportunity to earn quadruple digit yields for a certain period of time. And then you're able to get to the point where you're yield farming with house money. All right, now let's go even deeper. When it comes to technical and fundamental analysis, this is where I start. I always start with what is the Federal Reserve doing and what do I anticipate them doing, because that is where everything starts. The Federal Reserve's action affects all markets, always. So I like to come and look at the central bank balance sheet to see, if they're still offloading things. I like to look at the M2 money supply to see if they're printing money. I like to look at gold. I like to look at the S&P because right now, crypto market still mirrors the stock market. You can see the S&P is at an all-time high, right when Bitcoin's at an all-time high. If the S&P took a dump, I think crypto would take a dump as well, even though I do believe crypto will recover faster because it's already been through a full bear market and the stock market hasn't. And I look at some individual stocks as well, like Apple, since it makes up most of the S&P. I like to measure their stock buyback programs, all that stuff. And guys, if you want to keep tabs on this, other than booking a strategy session, follow our other YouTube channel, Know-It-Alls. We cover the Federal Reserve on a weekly basis, and it's more of a macro financial economic channel where we cover content to help just give you a good idea as to the economy. This personal channel is usually for more specific strategies and things like that. After that, I like to look at the price of Bitcoin because where Bitcoin goes, the rest of the market follows. I like to look at ETH. I like to look at the entire crypto market cap. As you can see, we're almost at all-time highs for the entire market, which is good. I like to look at stablecoin liquidity as well. You can see right now that the tether dominance is down, and what that means is people are selling stablecoins and buying altcoins. When we're in the bull market, you can see that we're around this level. We're back at that level again. When this is going up, that means people are selling altcoins and Bitcoin and buying stablecoins, waiting on the sidelines, and this is where we were during the bear market. And you can see that same trend with USDC. People are just selling more USDC so they can buy more crypto. So right now, everything is telling me that we're heading into a bull market. We saw Bitcoin hit all-time high before the halving. We got the stock market rising. We got the Federal Reserve keeping rates high. If they lower rates, I will probably adjust my ranges to the downside, and I will sell a large portion of my crypto because 99% of the time, probably 100% of the time, at least as far as back as data goes, we see the bottom after the Federal Reserve pivots and lowers rates. A lot of people think like, oh, they lower rates. The cost of capital is now cheap. People are going to borrow money. It's going to find its way back to assets. The party's back on. Well, that does happen, but after we see a bottom first. And the reason why we see a bottom first is because when the Federal Reserve pivots, it's usually because something is broken. And if something is broken, smart money takes a risk-off approach. They sell assets, they get into cash, and they'll either keep cash or buy bonds so they can get a yield before they wait to take another risk-on approach. So now after looking at all that, then and only then do I look at the specific crypto pair that I want to provide liquidity in. So if that's ETH USDC or Maple ETH, then and only then will I look at the chart and do my technical analysis and pick my range. I always start from up top and then zoom down. So based off what I see here, like I said, we're in a bull market. So that means if I want to provide liquidity for ETH USDC, that means I'm going to want to set my ranges pretty high. And the reason why is because I think ETH is going to keep going up. So this allows me to stay in range, but still make passive income while also being able to take profits in the underperforming asset. In this case, I'll be taking profits in USDC. If it's ETH BTC, whichever one is underperforming, I'm taking profits in. Neither one of those, I don't mind. And I made a video on the best strategies for yield farming in a bull market. I just released it last week. Give that a watch if you haven't. In there, I talked about how volatile pairs are best for bull markets because a rising tide raises all ships, and both assets will probably appreciate, increasing your likelihood to stay in range. So with that in mind, I set my ranges high. The market can only be doing three things at one time: setting higher highs in an uptrend, setting lower lows in a downtrend, or consolidate. If it's consolidating, I'll have my ranges more narrow. If I think we're going into a bull market, I'll have my ranges high. And if I think we're going into a bear market, I'll have my ranges lower to the downside so that as price is going down, I'm making money from the sell volume and I'm getting paid passive income to buy the dip versus having to pay to use a limit order and wait for the price to go down. Cool thing about doing this with yield farming is that even if the price stays the same, you're making money. And then when it goes down, you're still making money and buying the dip versus having to pay and not make anything. And for the bear market, I wouldn't set the range all the way down to the price that I think it's going to drop at. So like, for example, let's say the price of ETH is at 6,400 and I think it's going to drop back down to current price, 36,311. I would set my range probably from 66.71 down to maybe 2,000, 2,500. So that way I'm still making money buying the dip, but it isn't going all the way to the bottom. So that way I still have some cash. So then I can exit the pool, give it a little time to see if it's going to consolidate, and then I can provide liquidity in a more narrow range and then just sit on that ETH and wait for the price to go back up. So guys, in closing, when setting ranges, I like to think about how long I think the price will be within that range, where I expect it to go up or down. And it's not so much about setting the range to get the highest yield possible, because I always say as a general rule, if you want to check your farms on a monthly basis, maybe set your price range 20 to 40% above and below current price. If you want to check it on a weekly basis, maybe around 15 to 20% above and below current price. And if you want to check it daily, then you can have extremely tight ranges, maybe 5% or less or a little more above and below current prices. And all of those time zones that I gave you, crypto doesn't usually move more than 40% in a month, 20% in a week, or 5% in a day above and below. Although it does happen, and it has happened a lot, most often it doesn't, right? So it's not so much about getting a narrow range and just trying to get the best yield. You want to set intelligent ranges, and then the results will follow. Like when I get into my liquidity pools, I'm not like, oh, this is how much yield I'm expecting. I'm like, okay, this is where I expect price to go through all the things I went here, and I let the chips fall where they may. You don't want to chase the money. You want to chase the skill and do this thing intelligently, and then the money will follow. It always does. All right? So with that, I'd like to conclude this video. If you got value, drop a like, drop a comment, subscribe. Let me know what yield farming topic you want me to cover next. And like I said, if you're interested in doing this professionally with an elite group, click the link in the description and book a free strategy session. Other than that, I thank you guys so much for tuning in. I love every single one of you, and I will see you in the next video. Take care and trade safe.